Hi everybody, Eric Wilson with iSell Health Incorporated. Hope you're having a fantastic day. Today is Monday, September the 10th. Want to talk to you today. We've had our life insurance training and our insurance general training going on for the last 3 weeks. In honor of September Life Insurance Awareness Month, we have spoken last week about life insurance. We have one more significant topic to speak of on the life insurance training, and that is final expense. What are you going to do when you die? How are you going to pay for it? I found something out recently. I didn't know this. When you look in the obituary column and it talks about the death and the life that you had, and then it says funeral services pending. I just found out what that means recently. I used to think it was they're waiting to find out, for people coming out of town to get into town and whatnot. Services pending means the people don't have enough money to pay for the funeral, so they can't have it until they figure out how to pay for it. So you need to have a final expense plan. Now, oftentimes people wonder, gee, I had a 30-year term or a 25-year term, and now it's over. What do I do? Well, the idea behind a 30-year term or a 25-year term, 20, whatever you have, is to get your house paid off, get your kids out of the house, get kids through college and whatnot. Now your needs are different. Now you really need enough to put you in the ground. I mean, you don't need millions of dollars anymore. Insurance is a nice idea, but you don't need it. Okay. So remember when we did our term life quote, what was the first thing we did? We were trying to find out how much the funeral was going to cost. Was it, do you want a burial or a cremation? That's about $10,000 in difference. So we figured that to do a monthly premium, and based upon your health and whatnot, monthly premium to secure the and the death benefit, whether it be $10,000, $5,000, $20,000, whatever you feel you need. That's a good way to do it. It's basically a whole life policy, so it does build some cash value, but the premium would never go up. It'd be good for the rest of your life, and it may be $20 or $30 a month. Now, that being said, there's another option for final expense, and that's what I call a final expense irrevocable trust. I like them because with a final expense plan of $20 or $30 a month, if let's say you're 60 years old and your house is paid off and your kids are gone, and then you start looking at a $30 a month premium or a $20 a month premium. Now let's say you live another 30 years. Well, now you've spent $300-$400 a year for 20 years, 30 years, and now you've spent more than the policy was actually worth. A final expense trust, and not everybody can do these. Okay, I mean everybody can do them, but financially everybody can't. Basically, what you're doing is you're putting $10,000 or $5,000 or $15,000 up front. Some policies have a 3-pay system where you can do $5,000, $5,000, $5,000 over the course of 2 years or whatever. But all you're doing basically is you're putting that into a trust. It's irrevocable, so it doesn't count against your Medicaid spend down. Nobody can touch it in a legal suit. It's an irrevocable trust. It's in your name, and your family doesn't have to worry about anything. It's there. It's built on a life insurance chassis, so it's exempt from a lot of those things. Premium is paid for up front, so it's like a single premium plan. You get some interest over the course of time. There's no underwriting on those type of plans. So it's a nice idea, and if you're healthy and you're 60 years old or 55 years old and you can do that, that's probably a better way to go than a final expense life insurance policy. Now, if you're 75 or 80, different story, because you're probably not going to outlive a term life policy or a whole life policy. You're not going to outlive another 20 or 30 years. So sometimes the whole life final expense makes a lot of sense. Either way, that's it for this topic. Eric Wilson, www.isellhealth.com. Have a great day.